The North American markets experienced a financial earthquake, sending shockwaves through the global economy. On what's being called Independence Day, Wall Street saw its worst trading session since the COVID pandemic, with the Dow dropping 2,200 points, about 5% of its value. The market meltdown resulted in more than $3.1 trillion in market value disappearing in one trading day, equivalent to the GDP of a major industrial nation. All three major U.S. stock exchanges hit levels not seen since June 2020. President Trump's protectionist measures, announced on April 2, 2025, have sparked fears of a trade war. These tariffs, branded as Independence Day, were meant to protect American manufacturing, but may have triggered serious economic issues. The impact has affected every sector of the economy. From automotive to energy, software to agriculture, no sector escaped the tariff-induced damage. This raises questions about the long-term effects of such aggressive policies. While President Trump claims markets are going to boom, Wall Street experts present a more concerning outlook. The worry isn't just about immediate losses, but what this means for the broader economy. This market reaction could be just the beginning. The question is whether this Independence Day initiative will achieve economic independence or lead to isolation. The $3.1 trillion loss affects pension funds, retirement accounts, and millions of Americans' financial security. The timing of these measures, as the global economy was recovering from various challenges, including tensions with Russia, has complicated an already volatile situation. Many wonder if this could trigger a broader economic downturn. Breaking news. Historic market meltdown sends shockwaves through Wall Street. In what financial experts are calling the most devastating single-day collapse since the COVID-19 pandemic, Wall Street witnessed an unprecedented $3.1 trillion evaporation of market value on April 3rd. Our senior financial correspondent brings you the details of this extraordinary market event that's sending tremors through the American economy. The dramatic downturn, triggered by President Trump's sweeping new tariff policies dubbed Independence Day, has particularly hammered technology giants and industrial leaders. Apple, Tesla, and IBM are among the major casualties of what analysts are describing as a financial bloodbath. The numbers tell a stark story. The S&P 500 plunged by nearly 5%, its steepest single-day decline since June 2020, while the Dow Jones Industrial Average tumbled 4%, marking its worst performance in 5 years. The tech-heavy Nasdaq took an even harder hit, plummeting 6%. Apple's situation has become particularly emblematic of the crisis. The tech giant, heavily dependent on Chinese manufacturing, faces a double whammy of increased production costs and supply chain disruptions. Company executives made an unprecedented public statement, warning that the new tariffs threaten both cost structures and American jobs. The White House's dramatic shift in trade policy represents what many see as President Trump's highest-stakes gamble yet. By imposing broad tariffs on virtually all U.S. imports, the administration is attempting to fundamentally restructure global trade relationships that have been in place for decades. Market analysts are particularly concerned about the speed and severity of the decline. This isn't just a correction, says prominent Wall Street analyst James Henderson. We're watching the unraveling of decades of economic integration in real time. The sudden market collapse has sparked fears of a broader economic downturn, with investors rapidly pulling back from what they perceive as increasingly risky positions. The situation bears striking similarities to previous market crises, though the scale of this decline is particularly noteworthy. In what's being called Black Thursday by market analysts, U.S. stocks experienced their most dramatic plunge since March 2020, with the S&P 500 dropping 4.8% and erasing nearly $2 trillion in market value. The collapse follows President Trump's new tariff policies, dubbed the Independence Day Initiative. Retail giants suffered devastating losses. Nike shares plummeted 14.5%, Lululemon dropped 10%, and Ralph Lauren saw a 16% decline. The ripple effects extended beyond retail, as the U.S. dollar hit a 6-month low, depreciating 2.2% against major currencies. Tech giant Apple has emerged as a central figure, losing $200 billion in market value since mid-April. Company executives are in negotiations with the White House, warning that new tariffs could increase production costs by 10%. Their message: reduce Chinese tariffs or grant an exemption, or face potential losses exceeding $350 billion. Global markets showed similar pessimism. Japan's Nikkei 225 fell 2.7%, while Australia's ASX 200 dropped 1.6%. Chinese and Hong Kong markets remained closed for the Qingming Festival, with analysts predicting significant volatility upon reopening. Trump's tariff rates, reaching up to 54% on Chinese manufacturing, are drawing criticism from both Wall Street and Main Street. The policy, meant to protect American manufacturing, appears to be backfiring as corporations face mounting costs and plummeting stock values. Market experts worry about inflationary pressures these tariffs could create, potentially stalling economic growth. This reality contradicts Trump's campaign promises of economic development and stability, questioning his ability to deliver on his economic agenda. The situation has forced a review of Trump's signature policies, including tax cuts and reforms. With U.S. trade policies now threatening domestic tech giants as much as foreign competitors, the administration faces pressure to reconsider its approach to international trade. Breaking news from Wall Street as global markets reel from tariff Thursday, with devastating losses hitting investors across sectors. The Russell 2000 index plummeted 6.6%, marking a 20% decline from its November peak. In a domino effect, Britain's FTSE 100 dropped 1.5%, while Asian markets registered significant losses. The energy sector took a hard hit, with Valero Energy shares nosediving 15% as crude oil prices plunged 7% amid concerns over global economic slowdown. Market analysts were blindsided by President Trump's new tariff policy, dubbed Independence Day by supporters. The market failed to price in these measures, says Michael Robertson, chief economist at Goldman Sachs. This is far more sweeping than anticipated. J.P. Morgan has raised its recession probability forecast to 60%, while international leaders are threatening countermeasures. French President Macron indicated potential retaliation against U.S. tech companies, while Canadian Prime Minister Carney promised a robust response to Trump's automotive tariffs. The market reaction has driven investors toward Treasury bonds, as economists revise growth forecasts downward. We're seeing a fundamental shift in trade dynamics, explains Sarah Chen, global market strategist at Morgan Stanley. While tariffs can serve as bargaining chips, their immediate impact has triggered panic selling. The ripple effects are being felt globally, with severe implications for countries bordering Russia, where economic stability has been compromised by regional tensions. European markets are bracing for potential escalation as trade relationships become strained. This developing story represents one of the most significant market events since COVID-19, with over $3.1 trillion in market value evaporating in a single trading session. Stay tuned for continuing coverage of this unfolding economic crisis. In a dramatic shift shaking global markets, President Trump's new tariff policy, Independence Day, has triggered what analysts call a seismic economic event. The U.S. stock market lost over $3.1 trillion in value, marking one of the biggest drops since COVID. Trump remained optimistic, declaring, "The markets are going to explode." However, his confidence contrasts with the market reaction, where major corporations like HP, Nike, and Target suffered double-digit declines. Seema Shah at Principal Asset Management warns of recession, without offsetting measures like Trump's promised tax cuts. Goals to revitalize manufacturing would take years, while high tariffs will have immediate negative consequences. The effects are visible. Stellantis halted production in Mexico and Canada. Oil prices dropped 6%, and gold saw significant selling pressure. The tariffs shocked global markets. The EU, China, Japan, and Taiwan face tariffs exceeding 20%. The basic 10% tariff starts April 5th, with reciprocal tariffs following April 9th. European markets could see growth cut by 1 percentage point, with worse outcomes if retaliatory measures follow. The central bank will review interest rates and consider stimulus packages. Corporate executives, investors, and retirement savers worry about the policy shift. While some analysts see long-term potential in manufacturing revitalization, most stress immediate economic downsides. The selling remains orderly, though investors were surprised by the tariff's scale. The White House's list of countries facing reciprocal tariffs includes major trading partners, signaling a shift in global trade dynamics. In a dramatic shift in U.S. trade policy, President Trump has announced Liberation Day, implementing substantial tariffs on global trading partners that's sending shockwaves through the business community and drawing criticism from economic experts. The plan includes staggering tariff rates, with China facing a 54% increase and European Union countries hit with 20% hikes. Both have promised retaliatory measures, raising fears of a trade war. "We're going to start being smart, and we're going to start being very rich again," declared Trump, painting an optimistic picture of America's economic future. Trade Minister Howard Lutnick backed the president's position, stating Trump won't reverse these decisions. Major business organizations are sounding alarm bells. The Business Roundtable, representing corporate giants like J.P. Morgan, Apple, and IBM, warns of severe consequences. Their statement emphasizes that tariffs ranging from 10% to 50% could damage American manufacturers, workers, and exporters. The National Retail Federation highlighted the burden on American consumers. More tariffs mean more anxiety for American businesses and consumers. While leaders in Washington may not care about higher prices, hard-working American families do, their statement read. Economists warn that high tariffs pose risks to the U.S. economy, potentially raising prices on everything from automobiles to wine. They argue these measures could destabilize America's position in global trade networks. The National Association of Manufacturers contradicts Trump's job creation claims, suggesting these tariffs threaten existing jobs, investments, and supply chains. This creates a contrast between the administration's outlook and business concerns. As markets react and international partners prepare responses, the impact of these tariffs could reshape America's trading relationships for years. With consumer prices expected to rise and potential retaliation looming, the economic implications of Liberation Day may be far-reaching. In a dramatic shift that's sending shockwaves through the American economy, former President Trump's aggressive stance on tariffs has met with significant public resistance, according to recent polling data. Only 28% of Americans believe these trade measures will benefit the economy, while 58% fear negative consequences. During his recent address, Trump dismissed potential critics, stating, "There will be complaints from globalists, from outside sources, from special interest groups and fake news." He promised changes, declaring, "This is going to be a completely different country in a short period of time. It will be something the whole world will be talking about." Market analysts are increasingly concerned about recession risks, as Trump's trade policies threaten to upend global commerce patterns. Traditionally, American consumers have served as the world's primary buyers, purchasing products manufactured overseas at competitive prices. This arrangement has created the trade deficits that Trump frequently criticizes. While Trump points to manufacturing job losses, the transition to a service-oriented economy has yielded mixed results across regions. A notable milestone was reached last quarter, when real average earnings for male workers finally surpassed late 1970s levels, marking a decades-long journey to wage recovery. However, economic experts warn that reversing globalization could squeeze American wages. Trump's presentation of trade deficits, including examples like the gap with Cambodia, misrepresents the nature of international trade, according to mainstream economists. They argue that trade deficits reflect purchasing patterns rather than economic losses. The markets now reflect deep pessimism about the potential reinstatement of policies that promise to transform what many view as a fundamentally sound economic system. Trump's advocacy for tariffs, dating back to the 1980s, continues to drive his economic vision, despite warnings about potential negative consequences for American consumers and the economy. Good evening. I'm bringing you breaking news about President Trump's bold economic gambit reshaping America's trade landscape. In a significant economic policy shift, Trump has launched an aggressive tariff strategy sending shockwaves through global markets. For decades, our country has been plundered by countries near and far, declared President Trump, defending his decision that's impacting Wall Street. The move has caused a $3.1 trillion market value loss, making it one of the most consequential economic decisions in recent history. The president's Independence Day tariff plan aims to transform how America trades with the world. The White House argues that foreign nations have exploited the United States through unfair trade practices, leaving American manufacturers at a disadvantage. Trump's strategy is straightforward. By imposing substantial tariffs, he hopes to encourage Americans to buy domestic products while increasing tax revenue. The administration believes this will help reduce the trade deficit and revitalize manufacturing. Economics editor Faisal Islam warns we're heading into uncharted waters. A complex global trade war seems inevitable, he cautions, noting that Trump's tariff levels exceed those of the 1930s. This could trigger retaliatory measures from trading partners worldwide. The stakes are high. If successful, this policy could rebuild America's manufacturing base. However, economists warn of potential consequences: soaring consumer prices, alienated allies, and possibly a global recession. Major corporations are feeling the impact. Apple and Tesla report significant losses due to increased production costs, contributing to the market's downturn. Despite these warnings, Trump remains optimistic, betting his presidency on this economic transformation. This developing story will impact every American household through potential price increases and economic shifts. We'll continue monitoring these developments and bring you updates as they occur. Back to you in